Good evening, dear students. Today we are going to start with a new subject, open elective subject called Descriptive Analytics of Financial Statements. Okay, so today we are going to discuss about the first unit, the financial statements. So in this we are going to know about the we'll get going to get the introduction of financial statement, its meaning, definition and types, and next meaning, definition and key features. And in subunit 1.2 we are going to discuss about the types of financial statements, and in 1.3 we are going to see that what are the merits and demerits of financial statements. Okay, so let us start. I hope my screen is visible. Okay, so you can see my screen that there is a unit 1 called Introduction to Financial Statements. In that subunit will be containing of meaning, definition and key features of financial statements, and subunit 1.2 will be containing of types of financial statements, and subunit 1.3 will be containing of merits and demerits of financial statements. Let us begin with the introduction. So in introduction stage, we are going to understand what you mean by the financial statements. So financial statements are the written records that will convey the business activities and the financial performance of a company. So which will be carrying of the business activities complete detail, and also the financial performance of a company, that how a company will be performing a financially, how it is performing, what's its position, whether it is facing profit or a loss, whether it's a making profit or whether it is incurring the loss. So these all things will be understood by financial statements. So you can define the word itself tells us that financial statement in the sense all the descriptions or all the uh, materials which are considered available in that statement, or in a one preferred document, or in a preferred format where all the financial data will be given. Okay, so financial statements here are the written records. Those are the written records by a individual person or a group of persons called as accountants, clerks, or any people or any financial manager who is handling the financial statements, and who will be writing the business activities and as well as financial performance of a company. So financial statements are often audited by government agencies. So these financial statements are what? Those are the audited, those are rechecked by the government agencies. Government agencies in the sense there are certain preferred certified government agencies are there who will be coming and checking your paper, checking your financial statements, what all you recorded, how is your company performing, for the accuracy of, for the accuracy or for the transparency and for the and the uh, business ethicness you are maintained or not, legality, all those aspects they will come and audit your financial statements to ensure accuracy and for tax, financing or investing purposes. So this is about the financial statements. So once again, I'll explain that financial statements are the written records that will convey the business activities and the financial performance of a company. And financial statements are what? Those are often audited by the government agencies or government peoples or government hired persons, accountants, certain certified chartered accountants or certified chartered accountants, firms or consultancy groups, or any other external person or any other internal person to mention to ensure that accuracy and for a tax, financing or for investing purposes. So this is about the financial statements. Next, let us understand what are the key features available in this financial statements. So key features of financial statements are it is a written record that will convey the business activity, that what all a business did for a 1 year of time and financial performance of a company. So what is a financial performance? How a company is performing in its financial aspect, whether it is earning profit, whether it is earning losses, whether it is not earning profit as well and not earning loss, whether is expenses and losses, expenses and profits or expenses and incomes are equal. So those all will be analyzed by the financial statements. Next, in this there are three types are available. We'll see in future what all the types are available in this financial statements. In that, one is called as a balance sheet. Balance sheet shows that what is our company's position. Okay, it is also called as a financial position, statement of financial position. So that will provide an overview of that how many assets are available with the business, how many liabilities we are having, how many stockholders we are having. In a one particular picture, it will show a entire details. In upcoming classes, I will show you how a balance sheet will be look like. Okay, so this provides a overview of assets, liabilities, and stockholders equity in a one particular period of time. Next, and the next one, another type is income statement. So income statement is primarily focusing only on the company's revenues and expenses during a particular period of time. So for one particular set of period, they will be looking for that what are a company's revenues, how a company is generating revenue, how much a company is generating a revenue, and what are the sources of revenues, and also where a company is incurring expenses, what are the expenses ways, how it is expanding. Those all will be shown in only in one a set of calendar year or a one particular fixed period of time. So every business's fixed period time will be 1 year. Okay, so um, some companies will disclose their financial statements or income statements for a half yearly, quarterly, or a yearly twice, right? So this is depend on the company's nature and its regulating policies. Okay, once expenses are subtracted from the revenues and the statements produces a company's profit figure called net income. Okay, so once expenses are subtracted from the revenues, once the expenses are reduced or it is deducted from the revenues, then the statement will be producing, this income statement will be producing a company's profit figure called company's profit figure. So it will be finding out one figure that will be called as a net income. Okay, so now we need to understand that what is profit and what is net income. Okay, so there are two terms. Net income is what after deducting all your expenses in your revenues, that will be called as a net income, which will be saved for you. Okay, and profit is what which will be left for certain period of time for a certain specific money in which certain expenditure is also required to pay. Okay, so these are the two terms which will be provided by the income statement of a company. Okay, next one is very important one, that is cash flow statement. So this cash flow statement, it is a one statement which will be giving us the complete picture about that how well a company will be generating cash inflows and outflows, how a company will be having a cash inflows and cash outflows. So cash inflows and cash outflows is, so how it is different from the financial statement. In financial statements, we are recording all the activities, all activities we are recording that what is if it is bank transactions, if it is check DD transactions, demand draft transactions, if any credit transactions, if any cash transactions, this all will be recorded in the financial statement. But in cash flow statement, what we record only related to the cash which is coming into the business, which is inflowing to the business, and also the cash which is outflowing from the business, that is liquid cash which is coming into business and which is going out of the businesses. So it will measures that how well a company generates cash to pay its debt obligations. Okay, how well a company is generating its cash to pay its daily debt or daily liability, how they can deal with the, they can pay the liability, how they are dealing with the cash transactions. Okay, and also fund to its operating expenses to face its day-to-day operating expenses. So what will be the day-to-day expenses, like if any of the uh, clients are coming, if any of the meeting is happening, then they have to go for they have to call for refreshments. They need to give a refreshment. They need to pay for certain refreshment charges. So that will be carried what the funds where they can use for its operating expenses. And next, funds for investments. So how they can generate a fund, how they can generate a cash where they can invest and they can get a benefit of it. Investing in an asset or purchasing an asset is itself is a investment. Okay, purchasing some asset or purchasing something which is very much important for a business, which will improvises our business activities. Okay, for example, we can say that um, purchasing one stapler also, it's what, it's a income, it's an investment. How? Because due to that stapler we are using it and we are generating the revenue from it. So that is what the funds investment. Okay, investing in a one small broomstick to, it may be up to any kind of asset you're purchasing or any kind of amount you're investing, which will generate the future economic benefit for a business. So that will be called as a investment. Okay, so these are the key features of our financial statements. Next, let us move with the subunit 1.2, that is called the types of financial statements. Okay, so in that, first and foremost type is balance sheet. So what is balance sheet now? Balance sheet is provides an overview of a company's assets, liabilities, and stockholders' equity as a snapshot in a time. So in one picture, in one statement, it will provide it is a complete overview or complete picture of how much a company's assets are there, how much a company's liabilities are there, how much its equity stockholders equities are there. So that all will be presented by the balance sheet. Okay, it will be having the one and whole picture about what is company's assets, what is its company's liabilities and equity parts. Okay, so this will be called as a balance sheet. So the date at the top of the balance sheet tells you that when the snapshot was taken. Okay, on while writing balance sheet, while preparing balance sheet, there will be a date will be mentioned. Okay, a date will be mentioned when we are preparing the balance sheet. So that will tells us that when and at what time, at what date it will be prepared. Okay, so that will be the clear picture of that, or the clear overview of that company's assets and liabilities will be presented at that time. Okay, and which is generally the end of a reporting period. Okay, this will be usually at the end of the reporting period. Reporting period in the sense the financial year. Okay, here reporting period we can consider it as a financial year. Okay, that will be called as a, that will be presented. Okay, usually the balance sheet will be prepared at the financial year, at the end of the financial year. Okay, like we can say if our business is started from 1st April 2021. Okay, we'll take example of if my business, I have own business, had started at 1st April 2021. So I will be closing my balance sheet, or I will be preparing my balance sheet at the end of 31st March 2022, because 1st April 2022 again my new year will start. Okay, we are not, then I'm not going to club all my activities of a last year. Okay, so I'll be ready preparing one year's separate sheet like that. Here there will be a every year's sheet will be prepared, right? So that's why whatever we are mentioning at whenever we are preparing the balance sheet, that date we need to mention. And usually generally it will be having the reporting period at the end of a reporting period or a financial period. So there are some breakdown of the items in a balance sheet. There are certain balance sheet items which are breaked down in the below. Okay, so in that, first and foremost, we will go for a positive way, that is called as assets. Okay, so what do you mean by assets now? Assets are the movable and immovable properties or a investment made by a company to raise or to gain a profit or to have a wealth maximized in our business, where we can maximize our wealth. Okay, so that's why that is called as a assets. So assets will be considering cash and cash equivalents are called as a liquid assets. Those are the liquid assets in the sense which we are having the physical existence in our hand, where we can use it. Cash and cash equivalents in the sense cash in hand, and means where is cash is ready to use it. Cash at banks means my bank balance, that will be called as a cash and cash equivalents, where we can within a fraction of within a one day or within a very shorter period of time we can convert, we can expend it or we can use it. Okay, which may include treasury bills and certificate of deposits. So these are also wells. These are also what the important cash equivalents where we can convert it into a cash in a very shorter period of time, within 1 day or within some hour we can convert it. Okay, next is account receivables. Accounts receivables are the amount of money owed by the company by its customers for the sale of its products and services. Okay, account receivables are nothing but we can call it as with the other name called as a sundry debtors or a debtors. So what you mean by debtors or sundry debtors, sundry debtors or accounts receivables? These are the amount which we need to receive as a company. I need to receive it. Okay, so what will be happen here? Okay, for example, I am selling one. I am selling a. I'm having a marker manufacturing company. So what I'll do? I will send you 100 units of marker for 1,000 rupees. Now what you will do, you are a regular customer of me, so I will do, I will give you that, you may pay me, you can pay me by next month. So that credit duration, so you are become a creditor, I am become a debtor for you, so you need to pay back the money, right? So that is what the account receivables, which has to be received by a company from its customer for the sale of its products or services. Next comes inventory or stock. We can say stock or inventory, it is a asset which is kept in our godown, which is there with our, which is there with us, with us the company, where we can use it for a future benefits. Okay, that will be called as a inventory. Next is liabilities. So in liabilities there are again debt including long-term debt including the long-term debts. So where there are long-term debts are there and short-term debts are there. Long-term debts are having more than a 1 or 2 years, and short-term debts are which are having very shorter period of time. Okay, next comes shareholders equity. So shareholders equity is a company's total assets minus total liabilities, means it is represents the amount that money would be returned to the shareholders. Okay, so it is a invested by the shareholders to start up our business. So that is called as a shareholders equity. And here we are going to give them on their shareholders whatever they earn the profit, whatever a company earns profit, on that we are going to give it as a dividend as a to the shareholders. Okay, so this is about the balance sheet. Next we'll go for a income statement. So income statement is like, it is like the balance sheet where it will be showing us the covers the range of time. Okay, the income statement covers a range of time, which is a year for annual financial statements and quarter or for quarter for a quarterly financial statements. Okay, it is a having a 1 year. If it is a year, then it will be called as a annual financial statements. If it is a for a quarter, if you're preparing, that will be called as a quarterly financial statements. Okay, so this income statement provides an overview of that. What are our revenues? What are our expenses? What are our net income? What are our earnings per share? For each and every share, how much is our market value, or what is the our market value of a share? That will be presented by the income statement. Next comes revenue. So what do you mean by revenue? Revenue or operating revenue. In this income only, it's a subpart revenue. Revenue is what? By selling. It is a revenue, or it is a money which we are earning by sale of a company's product. Okay, that will be called as a revenue. Okay, so there are so many revenues are there: non-operating revenue and operating revenue. Operating revenue is what? It is what we do the exact work, like selling and operating, selling and product, by manufacturing a product and selling it. It's called as a revenue, and setting of all the expenses which is incurred for that product. Okay, and next non-operating revenue in the sense during a business period of time what we're earning. Okay, some cash I deposited in a bank as a FD or a savings. So on that I am earning an interest. Okay, that will be called as a non-operating revenue. Or some property I let out. Okay, I have a one space vacant. I am letting out that property. On that I'm earning a rentals. That will be called as a revenue. Okay, so that will be that is what the non-operating revenue. Or some non some strategic partnership I am having. On that I'm earning some partnership profit. That will be called as a revenue. Or I am going to advertise on my company's logo. I'm advertising any company's any other company's advertisement or any property. So that will be called as a income. Whatever advertisement charges I'm earning, that will be called as a revenue. Okay, so this is about the total financial statements. So I hope you all understood, you all enjoyed this learning. Okay, so this is about the descriptive of analytics of financial statement. In that, the first unit, introduction to financial statements. I hope you all learned very well. Further, any doubts, please drop the questions. I'll answer you. Thank you.